Let's talk about platinum, a metal rarer than gold but often overlooked. It's not just for jewelry, it's a critical industrial workhorse. Platinum's density, stability, and unique properties make it essential for industries like automotive, refining, electronics, and medicine. The auto industry is the biggest user, especially in catalytic converters that keep our air clean. Without platinum, pollution would skyrocket. This isn't just about speculation. Platinum's demand is built on necessity. For years, platinum traded at a discount to gold, despite being rarer and more useful. But that's changing. Prices are moving and investors are taking notice. The big question, is this rally real or just hype? To answer that, we'll break down supply, demand, and the economic trends shaping platinum's future. We'll look at both the bullish and bearish cases. By the end, you'll know if platinum deserves a spot in your portfolio. So, get ready. This is the platinum story you can't afford to miss. We're diving into the fundamentals, the risks, and the opportunities. Platinum isn't just a shiny metal, it's a vital part of the modern world. Let's see if it's the investment you've been overlooking. Grab your notebook and let's get started. Booyah! Why did platinum suddenly surge? It's a mix of tightening supply and surging demand. Years of surplus are gone. Mining disruptions and dwindling stockpiles have squeezed supply. Platinum mining is tough and slow to ramp up, so any hiccup hits the market hard. On the demand side, a global economic recovery and booming car sales have driven industrial need higher. Automakers, once using cheaper palladium, are switching back to platinum as palladium prices soared. This substitution is a major demand driver. Investors noticed platinum's huge discount to gold and piled in, seeing a bargain. The narrative shifted. Suddenly, platinum wasn't the underdog anymore. Short sellers scrambled to cover, fueling a short squeeze and sending prices even higher. Momentum traders jumped in and the rally fed on itself. It's not just one factor, it's a perfect storm. Supply is tight, demand is rising, and sentiment has flipped. That's why platinum's on fire. The question now, can it last? We'll dig deeper into the fundamentals next. Stay tuned, the story's just getting started. South Africa dominates platinum production. About 70% of global supply comes from its deep, challenging mines. This concentration makes the market fragile. Any disruption sends shockwaves worldwide. Power shortages and rolling blackouts regularly halt mining operations, cutting output. Labor strikes are common, with powerful unions and a history of long, disruptive disputes. These risks create a permanent premium in platinum prices. Mining is expensive, and companies have little room to expand quickly. Any unexpected event, power failure, strike, or new regulation can slash supply overnight. The supply side is tight and inelastic. Investors know a sudden supply drop is always possible. This fragility supports higher prices. South Africa's challenges are baked into every ounce of platinum. The market can't easily respond to demand spikes. That's why supply risk is a key part of the platinum story. In 2025, the supply side remains the wild card. The power is, quite literally, in South Africa's hands. The auto industry is platinum's biggest customer thanks to catalytic converters. These devices turn toxic car emissions into harmless gases, mandated by law worldwide. As emission standards tighten, more platinum is needed per vehicle. Automakers once switched to palladium, but as its price soared, they're now returning to platinum. This substitution is a major multi-year demand boost. Electric vehicles, EVs, are a long-term risk, but the transition is slow. Hybrids and traditional engines still dominate, especially in developing markets. Heavy-duty vehicles like trucks and buses use even more platinum. For now, the internal combustion engine isn't going anywhere. Automotive demand remains robust for the foreseeable future. The substitution from palladium is a powerful tailwind. Global car sales and stricter emissions laws keep demand high. Platinum's role in clean air tech is secure, at least for the next several years. The auto sector is the engine of platinum's bull market, and it's running strong. Platinum isn't just about cars, it's a star in jewelry and industry too. In jewelry, platinum's purity and luster make it a favorite for wedding rings, especially in growing markets like China and India. Lower prices have made platinum more accessible, helping it regain market share from white gold. As economies recover, luxury spending on platinum jewelry is rising. Industrial uses are just as important. Platinum is vital in petroleum refining, silicone production, electronics, and high-tech glass manufacturing. Its resistance to heat and corrosion makes it indispensable in many sectors. This broad demand base stabilizes the market. If auto demand dips, other industries pick up the slack. Platinum's versatility is its strength. It's not a one-trick pony, multiple industries rely on it, making demand more resilient. This diversification supports prices and reduces volatility. Platinum's story is about steady, growing need across the board. That's a solid foundation for any investment. How does platinum stack up against gold and silver? Historically, platinum was pricier than gold, rarer and seen as the rich man's gold. But now, platinum trades at a steep discount to gold, a rare anomaly. Gold is mostly a safe haven asset, prized for its monetary value. Platinum is driven by industrial demand. Over 60% of its use is industrial. When economies boom, platinum outperforms. In downturns, gold shines. Silver is a hybrid, part monetary, part industrial, but its market is much larger and less volatile than platinum's. Platinum's small, tight market means price swings can be dramatic. The current discount to gold is a key part of the bull case. As industrial demand grows and supply stays tight, that gap could close. Platinum offers more upside if the global economy stays strong. It's the industrial titan versus the monetary king. For investors, platinum is a leveraged bet on growth and green tech. The reversion to the mean could be explosive. The future of platinum could be defined by the hydrogen economy. Governments and companies are investing billions in hydrogen as a clean energy source. Platinum is the key catalyst in two critical technologies, PM electrolyzers and hydrogen fuel cells. Electrolyzers use platinum to split water into hydrogen and oxygen. Demand is set to soar as green hydrogen production ramps up. Hydrogen fuel cells, powered by platinum, are ideal for heavy-duty transport, trucks, buses, trains, and ships. Each fuel cell vehicle uses much more platinum than a catalytic converter. Major manufacturers are already rolling out fuel cell trucks. Countries like Japan and Germany are building hydrogen infrastructure now. This isn't a distant dream, it's happening. The hydrogen sector could rival automotive demand for platinum. It's a long-term, game-changing growth story. Platinum is at the heart of the clean energy transition. For investors, this is the ultimate call option on a greener future. The hydrogen revolution could redefine platinum's value. The potential is massive. Every bull market has risks. Platinum is no exception. A global recession would hit industrial demand hard, dragging prices down. Technological advances could reduce platinum use or find cheaper substitutes. Faster adoption of battery electric vehicles would cut demand for catalytic converters. On the supply side, if South Africa solves its power and labor issues, output could surge and pressure prices. Recycling is another wildcard. Platinum from scrapped cars can be recovered, adding to supply. Efficient recycling could cap price gains if it ramps up quickly. These risks are real and can't be ignored. The market is volatile and sensitive to both demand shocks and supply surprises. Investors need to watch for shifts in technology, policy, and global growth. Platinum's rally isn't guaranteed. Weigh the risks before jumping in. No investment is bulletproof. Stay sharp and stay informed. So is platinum a buy in 2025 and beyond? The supply is tight, dominated by a fragile South Africa. Demand from autos is strong, with substitution from palladium adding fuel. Jewelry and industrial uses provide a stable demand floor. The price gap with gold is historically wide. Platinum looks undervalued. The hydrogen economy is the long-term game changer, promising decades of new demand. Risks exist: recession, EVs, supply surges, and recycling. But many of these are already priced in after years of market pessimism. Fundamentals have shifted from surplus to deficit. More demand than supply means upward pressure on prices. The path won't be smooth, but the long-term trend looks bullish. For investors with patience and risk tolerance, platinum is a compelling opportunity. It's an undervalued asset with powerful tailwinds. Do your homework, but the case is strong. Platinum's rally has legs. The metal is back in the spotlight. Booyah!